Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, everybody. Welcome to this Wednesday edition of Benzinga's Pre-Market Prep. Spencer Israel here with Joel Elconin and Dennis Dick. And, well, we're in the thick of it now, folks. Earnings season is going to dominate this show. We have, 30, 40, 50 relevant companies reporting between yesterday and this morning. So we're going to talk about that. That'll be the theme of the show. If you have any, because we won't get to all of them, if you have any that you want us to get to in particular, just throw them in the chat and we will do our best to get to them. I do want to remind our listeners that the Benzinga FinTech Awards are coming up May 15th and 16th in New York City at New World Center, I believe is the name of the venue. If you go to BenzingaFinTechAwards.com, enter the promo code PMPVIP. Before the end of the week, you can get $200 off a early bird ticket. That brings the price down to $297 a pop. Again, BenzingaFinTechAwards.com. PMPVIP is the code for that. Joel, what is doing this morning in the S&Ps?
We are trading in the red here by $9 at 26 and a quarter. We were heading for the low of the session, or we were at the low 18 and a quarter, and Boeing came out and helped us out. But let me give you a big number on the downside. And there's one number only. Tuesday's low of 26.16. After that, have some other daily lows, but that will be the gateway to taking us under 2,600. Crude is trading in the red here by 9 cents at 67.62. Just hanging out. Took out yesterday's low, but just hanging out here. Not really heading for Monday's low, which is 67.14. Gold is in the red by 10.80. No flight to quality there. Silver in the red by 20 cents. And let's see, can Bitcoin keep its streak going? Bitcoin, no, trading in the red, but the futures are still holding above 9,000. Dennis, a very predictable earnings season. You have good earnings and you get beat. Will Boeing buck the trend?
I don't know if it's been predictable, Joel. I don't know if that's the word for it, but a very interesting earnings season on a very and the theme and the trend, which started with the banks. Spencer Israel pointing out on the pre-market show. Every bank had good numbers, it seemed like, rallied on the initial reports, and then sold off and closed in the red. Yesterday, we saw that not only, but it spilled over into everything. Caterpillar, Lockheed Martin, your two stocks, had great numbers. Stocks trading handily up in the pre-market. Up $7 was Caterpillar. I think Lockheed Martin was up almost 10. Those stocks opened at their highs, basically, and just epically collapsed. We're talking Caterpillar losing over $20 from where it was trading in the pre-market. We're talking Lockheed Martin losing $35 from where it was trading in the pre-market. Unbelievable moves here on good numbers. So Google maybe started that trend the night before because Google had a pretty good report, traded up 60 initially on it, and then obviously ended up closing down 40. So you're talking about a 100-point reversal in Google. It's just the earnings season. It's difficult if you're reporting bad earnings like 3M, they're going to hit you hard. If you're reporting any earnings, though, right now, it seems like they are hitting you hard. Now, let's see what happens with Boeing. It's trading up $8, but is this going to be an instant replay of yesterday? It's a great report. Give us a number, Spencer, for Boeing, and we can break it down.
Oh, quickly there. Okay, let me pull my Benzinga Pro. Boeing reporting this morning, 7:30 this morning. Q1 EPS, $3.64 versus a $2.58 estimate. Huge beat by over $1. Sales, 23.4 versus $22.24 billion. So another big beat there as well. They're also raising their guidance for the fiscal year, both EPS, well, just the EPS actually for the fiscal year. They're raising that guidance by 50 cents on the low and high end of the range, and that beat the estimate. So great Q1 and a raise on the fiscal year guidance. And what's happening?
It's up $8. It's trading near the highs of the session, but if you look at the chart, 340 looks like a brick wall up there. I mean, there's so many highs kicking around there. Even yesterday's high, well, actually, I guess it got up to 347, so you got to go a little bit higher than that. But all those levels up there. I don't know, Joel, are you fading this? Are you fading this Boeing move?
I don't know,
It's up
man.
8. It's so scary to come in and just fade these great reports, but it's been the play. It's been the play every time. Do you think it's the play again?
Oh, boy. I tell you, I just don't like the fact that there's really nowhere to hide. So let's say you're shorting it at 340 here. You know, what do you give yourself? $1, $1.50, $2? Because yesterday's high was up at 347.67. So, you know, maybe look for that higher open, a rally another buck, and then come back down through the opening price. I think that's what I would use as a bogey. Also, just looking at, I'm looking at my charts here, and I'm looking at the daily, and look at your close from Monday is going to be my bogey. That's your right in the area, your pre-market high, 338.84, and that's right near the highs of the pre-market session, which is 338.18. So that's one key. Another thing, Dennis, look at the Lockheed Martin chart here. Look where it traded to in the pre-market. Never even got near that level. It got over 365. Remember we were talking about,
it had leaked before.
Yeah, can it even take out the all-time high? And it did it. That strategy of not shorting the open would have worked handsomely in Lockheed Martin, because you rallied a little over $1. We came back down through that open, man. Whew, Katie, bar the door.
And that's the key, too. Look where the stocks open, and they get a little lift. They come back down through the open. There's always been a trade there. That's for 18 years that trade has worked. And you were pointing that out to me way back when I started as a young buck just out of university when I was 22 years old in 1999. Joel would always say, look at the open. And, you know, stock starts trading above it. That's okay. It starts trading and comes back down through the open. That's usually a sign that you don't want to be long the stock. And you know what? That's worked for me for 19 years. So thanks for that tip 19 years ago. We're giving it to all our listeners there right now. It's a great way to play these stocks. Look at where it opens on the New York Stock Exchange. So grab that opening tick at 9:30. And if it opens and starts rallying, okay, but have that as a bogey. It starts to trade through that open. That's where a lot of professional traders say, nah, not for me, because there's so many pros and so many, floor traders that would look at those same levels. So the open is a critical number for this. Now, even talking about that, though, we're up 7. Who's coming and buying this morning? Because I'm scared to buy it. Are your institutional money managers going to come and buy Boeing up 8 after they saw what happened to Lockheed Martin, after they saw what happened to Caterpillar, after they saw what happened to all the financials, after they saw what happened to Google? I think they're scared. I think they'll be scared to buy it, and continue it up. So I don't know if the risk reward, it comes in here to buy it at up $8. I think the risk reward says more to short it, which is, it sounds counterintuitive to short on great fundamentals, but it's been working.
And another, let's go to some stocks. Do you want to go to the cover of the ones after the close yesterday and then go into this morning?
Do Twitter first, because
okay,
Twitter's doing the same thing. Twitter's getting a nice lift in the pre-market. It's already starting to leak here a little bit, though. We are off the highs here in TWTR, which is concerning. Spencer, we know it's going to be all about the metrics there, but give us the breakdown and give us the numbers.
16 cents versus 11 cents. Sales of 664.87 versus $605.25 million. So beats on both those numbers. Average Q1 monthly average users 336 million people. That is up 3% year over year.
So nice numbers for Twitter. Where did we get to here so far in the pre-market, Joel?
We got the 34.90.
No, that can't be right.
Yeah, it is.
What are people doing? No, on volume?
Yeah, Dennis. I'm looking at that bracket, and nearly 400,000 shares traded.
Was that right on the opening tick, and then they just came fading it right away, or what? I got to get up earlier and trade these things.
Wait,
that is just easy money.
34.90. That's what you said.
34.90.
Is that what you said?
It got to $35 almost. Is that right?
Yes, it is. Please, chat, help me out here.
That's unbelievable. Okay, stop the show for a minute. Everybody who listens to the pre-market prep show, look at what's been happening here with stocks that are reporting good numbers. They're gapping up and then they're giving it all back. Don't buy something up, and I hope some of our traders maybe made some money on this, but don't buy something that's up $4, over 10% on their earnings reports right after the numbers. That's just ridiculously inflated. It's giving it all back. So Twitter has done this too. Twitter's already given it all back too. I looked at it trading up. I saw it 31.5 this morning. I had no idea. What time was that at?
It was in the 7 to 7:15 bracket. Spencer, what time?
Holy cow. People are crazy. You got to realize the market environment that we're in. That trade might have worked 2 months ago or 3 months ago when they were buying everything and, and the market was in a full-on raging bull market. This is not that environment. So the environment is not going to be susceptible for stocks like Twitter gapping up 4 points on their earnings reports. There's just not going to be nothing else behind that. I'm not surprised that the sellers came in. Everybody who bought this thing back in February and March just got all their losses back. They're like, thank the Lord, I'm out of this thing. Now, they've given it all back. So it was a good opportunity an hour ago for anybody who was obviously trading on that report. Maybe I should have been trading on it too. I was hanging out with my kids a little bit this morning. But in any regard here, it is very difficult to chase price. So all I want to say, maybe you don't make money on it, but don't go buying things like, in my opinion, this is all an opinion, but don't go buying things that are gapping up 10% on appear to be good reports, because this market trend is to give it back. And Boeing's concerning to me now even more. So we are up $8 in Boeing. It is up 2.5%. It is a great report for Boeing. And in the normal markets, I would say yes. This is a report that you can probably buy the stock on. But we're not in normal markets here right now. And the earnings season has been punishing stocks. So I'm scared on the Boeing. Maybe it's going to be the one that bucks the trend. I mean, they're not all going to do that. But wow, that Twitter move, that's incredible.
Yeah, getting multiple confirmations here from Stargazer, Alex Delano, Rocket 1530.
Soho says he sold up there. Good job, Soho.
Who did?
Nice.
Soho did?
Chat says I sold. Good job.
Oh man, you had to.
If he's talking about Twitter, he just says I sold.
He was, why? Because Soho likes the daily charts, and he was looking at your March 20th high that was 34.95, and he got out there perhaps a little bit ahead of it.
Good job.
You had 1, 2, 3. You had a 4-minute rally off the number up there, and then you had a 3-minute decline straight up and straight down. Just got to stay green in Twitter. That's what I'll keep an eye on the closing price. You can maybe discount that 34.90 even coming into play. I'd even look at the last couple days.
You're not seeing 34.90. You're not seeing 33.90. You're not seeing 32.90 on this. You might not see 31.90. This is trouble. When they go up $4 and they go red in an hour, that's trouble. Look at the Caterpillar chart. I mean, this Twitter could end up going red here and could, I don't know. At this point in time, can you sell it short here now? I mean, now it's 4 points off its pre-market highs. So I don't know if you can do it, but I look at this, given, 90% of it back, why not give the whole thing back and go red? It might just do it. So it's hard to make a call here on this, but I'm not buying Twitter.
Not
in this earnings season.
You can almost do a reset here and say, okay, 34.90, you can put that out of your mind. And you can say, hey, let's take out yesterday's high on this report. That was 31.64. We're 90 cents away from that. So until we even, look at your daily high. So I'm just going to stick with that. And then your closing price of 30.47. And boy, if too bad if you took, we're going to go red here in a few seconds. Too bad if you took this thing home long overnight and then, some options and you played it and you get a chance to sell the stock against it, because that would have been just incredible.
And that's what you've got to do. When you're an options trader, I'm going to say right now, there's so many traders out there who only will sell the option. So they buy calls on this thinking, and they're looking at it 7:15 this morning. They're like, yes, I'm going to make so much money on this when the options open at 9:30 and sell it. And then they're like, oh, no, it's come all the way back down. I couldn't even sell. I never had a chance to sell my options. Well, if you got the call, sell the stock short against your options. You can lock it in. And whenever I owned options, I was always trading the stock against it because I don't like even paying the spreads. But when the options aren't open till 9:30, it's the only thing you got. So you see that stock up 34. Let's say you got 10 calls, the 32s. And let's say you got, 10 of them. Well, you can sell 1,000 shares short at 34. And you lock in the $2. And then all of a sudden, not even that. Now you're making money because now you don't even have to exercise the calls. If you're still holding on to it, you're short 34 for 1,000. Now it's at 30.5. You're up $3,500 instead of the $2,000 that you locked in. So you locked in $2,500. Then you still had the participation on the downside, and you're participating now here nicely. So there's an awesome, that's the thing, and obviously market makers know this on the floor. They always trade the stock against the options. The downside is maybe you just don't have the money. Maybe it's a really small retail account and you don't have the money to, put in $34,000 short in Twitter. I think you gotta, though, to make money in the long run in options. I always have been trading stocks. If you're buying options, I've always been trading the stock against my option positions, and it helps a lot.
Can I read? We were talking on the pre-market show about how everyone's beating, and we're talking on the show. Everyone's beating, and the market's not responding. Right. I want to read from this note that this Bernstein note from this morning. Now, analyst notes, if you've ever read one, can be long and tedious to get through, but there can be nuggets buried deep in them. This segment, or this passage I'm going to read, was buried on page 8 of this note. A very good note from Bernstein this morning, all about how operate the difference in GAAP and non-GAAP and fact and fiction with regards to earnings reports. So if you indulge me for a moment, I'm going to read from this note because I think it speaks to what we're talking about this morning. Operating earnings are a non-GAAP earnings number reflecting the opinion of what corporate management would like earnings to be. Then they quote the Federal Accounting Standards Board Chairman Russell Golden, who stated he estimated that 88% of S&P 500 companies use non-GAAP earnings, and his concern is not just that the number of such non-GAAP measures, but their nature is that some lacked credibility because they ignored GAAP recognition and measurement principles, completely and inaccurately depicted the underlying event. The reporting of non-GAAP earnings by companies and the alacrity within which investors use them is worrying, as it is an example of exactly the triumph of opinions over facts that is the subject of this essay. Operating earnings will usually omit, quote, unusual items, permitting individual company management to decide what constitutes, quote, unusual. A recent study found that for reporting in 2015, non-GAAP adjustments increased net income 82% of the time, reflecting the opinion of management of how to view their numbers. The same study also showed that acquisition and divestiture adjustments are the most common type of non-GAAP adjustment. This fits the pattern of allowing management to decide what is unusual and what is not. And so and also the note went on to elaborate that they see that this gap between, or the difference between GAAP and non-GAAP, that gap in between it widens during later stages of the economic cycle, which they say we are now in. And just, I think that's might be that's a really good observation of what's happening here. We're seeing everyone beat, right? Or we say they beat because the numbers say they beat, but we're looking at, non-GAAP numbers, and it's up to.
Are we looking at non-GAAP numbers though? Like what aren't like in the US, and I'm going to ignore the China stocks here for a second, because we know that they don't always follow generally accepted accounting principles, which is what GAAP stands for. But don't we, have to be reporting the GAAP numbers in the US? I thought that was, standard.
Yes. Yes. They all have to report it, but the number that is publicized may be non-GAAP. The number that
that's brutal if that's happening. I mean, we've got to talk. And I don't think that's the case in these earnings seasons. Like, I don't think it's the case that all of a sudden Caterpillar, but the non-GAAP was bad. I don't think that's the case, was it?
I think
the initial number was not the number that's the generally accepted accounting principle number.
That's the number that everyone, that the street cites is generally the highlight of the release, which is going to be the non-GAAP number. So that's a different.
Is that right?
That's a different conversation. It's not all the time. I'm not saying that's always.
I would just think you're always highlighting the GAAP number. I wouldn't even look at a non-GAAP number. I don't get it. I'm not sure. I'm not an accountant.
For example,
I'm a stock trader, so this is news to me, Spencer.
Well, for example, look at Google a couple of days ago, right? The first headline that broke, the first number was EPS 13.33 versus an estimate of $9.31. That's a huge beat. But the actual adjusted number, the GAAP number, $9.93 versus $9.31. So $9.
It's because they report those non-adjusted numbers.
Yes, and that's what people see. That's what people see first, and that's why Google got that spike. So
and then if you do the adjustments because there's one-time factors and whatever else in there, that the continuing earnings is not always as good as the initial number shows. So you're saying that there's that initial spike sometimes, and in the case of Google, I think you were correct. Because I did see the big $13 number too off the hop. That's what hit my tape first. And then, a minute later or 2 minutes later, you're seeing this 9.5. And then you're like, oh, well, that's not nearly as good. So, I mean, it's all probably in the initial report, but maybe it's the media that's highlighting it more so than the
yeah.
companies? Is that what it is? It's the media just grabbing the biggest number and throwing it out there to, maybe, just want the positivity. I don't know what it is.
I can't speak for
it sounds like a media problem.
I can't speak for other people. I can't speak for other people, but it's whatever hits the release is what you're going to say right off the bat when it's 7:30 and earnings are flying. You
got to look at those GAAP numbers. It's a great point you're making here, Spencer. I completely agree. This is a great point. If you're looking at these non-GAAP numbers, I mean, you might as well, not even be looking at the numbers at all. Just trading what you see, because the GAAP numbers is really, in my opinion, what matters.
Sure.
So, and T-Max agreeing with you, says they're always talking about non-GAAP, but I mean, we're over here in the U.S. I think we should be talking GAAP all the time, in my opinion.
Yeah. So. It's the company's discretion. But this is a larger problem. This is not, beyond the scope of our show, or this This is an industry-wide problem. But it
sounds like a media problem that they're just publicizing and highlighting the wrong number. They should be highlighting always the GAAP number, not the non-GAAP.
Okay, but if it's being cited on the street too, then if the traders are the ones that are doing the trade, I don't know. I don't know. I mean,
I don't know either.
Yeah. Okay. Moving on.
It's an interesting point you're making.
Yeah.
And everyone knows my accounting background. So
we are accountants on the show. Me and Joel are not accountants. We're the opposite of accountants. So when you talk GAAP, when we hear me and Joel hear GAAP, we're looking at the chart.
GPS.
Where there's no price on the chart. We're looking for the gap in the chart. Yeah, right. So every time you're talking gap, Spencer, I'm like looking at the Google chart. And I'm like, where's the gap?
Yeah, okay.
I don't see. Oh yeah, there is a gap there. There's a gap between 1082 and 1060 on the chart.
All right.
That's me and Joel's gap.
All right, let's. Joel.
I hated accounting in school. Now we're gonna go on a tangent. Did you like accounting in school, Spencer?
No, I didn't take accounting in school.
You're a smart
God.
one. Joel, did you like accounting in school? You didn't take accounting either, did you?
I told the story a couple weeks ago.
I
took it pass fail, and I got 19 out of 50 on the final, and I passed it.
19 out of 50 is not a pass. How did they let you buy on that?
Because I did all the homework, and I had
and there's a curve.
I don't know. You maybe got like a B- on the midterm or something. Yeah, I told you that story the night before the final. I was studying, and one of my buddies said there was a party at Michigan State. Do you want to go? So
you did tell us.
I went, and then I just came back because I just knew I was dead.
Well, how is 19 out of 50 a pass? That's a fail by my math.
Yeah,
There's some non-GAAP accounting numbers for you right there on Joel's exam. They're using his non-GAAP numbers.
You know what? People want to know about ATI. This has been too long. ATI is coming up in the chat here from Bull for Trading. I don't see any news on this. I don't see it really moving at all. ATI, what is this?
Well, they had earnings yesterday morning.
Yesterday
morning. Okay. Yeah, before the
not a big gap. There's a gap. We're talking gaps. There's a gap in the ATI chart. Thanks. That's actually we can give her a point across here. A nice gap in the chart there, Joel. And how do you trade gap? Not GAAP, GAP.
All right. Dennis. Well, we got to Ray Dennis in here.
All right.
You want to see follow through? You want to see follow through yesterday's high, which was 27, closed right near the highs of the session. 27.77, and then if you go on your daily and you see a 27.79 high, so I want to plow through that. I want to get in the 28 handle, and I want my next target would be 28.42. But it's very important to take out that high, yesterday's high in ATI. Okay, more earnings.
Boeing continues to fly here, so we're getting up to that 340 area where all that resistance is. Maybe this is going to be the one that bucks the trend. Because obviously Twitter's giving it all back, and Google, Twitter's starting to hold on here a little bit too. And the market's trying to come back. Maybe Boeing is going to buck the trend. There's a lot of other reports. Spencer, it's 120 stocks.
I wanted to go to Win, and this kind of goes back to the point.
The same thing. Yeah. Was this GAAP, non-GAAP?
Yeah, here we go. I'm going to read you both. Q1 GAAP EPS was $1.99 loss. Okay, that was the GAAP EPS. The adjusted number was a $2.30 EPS. Now that is the one that correlates to the estimate, because the estimate was $1.98. So the GAAP.
So it's the non-GAAP number because they're taking out the adjustment. So that's basically the difference. So we're learning accounting here this morning, Joel. So basically, the difference on these media numbers here is when you're talking to GAAP, they've got to include it all.
Look at the estimate. The estimate was $1.98. So the estimate is accounting for some adjustments too, because they weren't going to miss the estimate by $2, which is essentially what the GAAP EPS is, $2 lower than the estimate. That's not, going to be, or $4 really, because the estimate was $1.98. The GAAP was $1.99 loss. So that doesn't relate at all. So you want to use the
so you got to talk to non-GAAP numbers. They want what I kind of get. So I'm taking back some stuff. I kind of get you got to take the one-time adjustments out though, because you want to know how this company's doing on a continuing basis. Everything's going to have noise. Where there's some major. Maybe there's a lawsuit. One's probably got some of those coming at them, and they've got to take that one fee. So so then that's going to bring down your numbers for this quarter, but it's nothing to do with your continuing operations. Correct. I want to know what the continuing operations are going forward, whether that's GAAP or non-GAAP. Doesn't matter to me. I want to know what the numbers are like on a continuous basis, though. So maybe it isn't bad that they talk non-GAAP.
Yeah, well,
but it's confusing sometimes when you get the numbers this far apart.
It's confusing. So yeah, the adjusted number $2,
especially for a non-accountant.
So anyway, to recap, adjusted number, which accounts for some one-time cost, $2.30, and $1.98 was the estimate. So they beat the estimate by 32 cents.
And it doesn't matter, because this thing popped on the initial beat, and I even saw it go by my timeline. They beat even the highest estimate, it said. And the stock was trading up at 191, 192, and looking like, hey, we might get a little lift here. But it doesn't matter because it reported earnings, and it seemed like everything that was reporting earnings yesterday, at least, gets sold off, whether it was good or bad. And it was good, and it doesn't matter. It's down $5 here on OK report.
And you did get an initial pop up into the upper 192 handle, 192.88. No exact number there, but just look at your highs over the last 1, 2, 3, 4, 5, 6 sessions, even 7 sessions, that 192 to 194 zone. But that's history. We're not going to see that today. We are trading below yesterday's low, which is concerning, 186.89. So that's going to be your resistance for now. Just based on the daily levels, if you're trying to long here, you really have nowhere to hide. 182.38 and 182.66 were a pair of lows back from the 13th and 16th of the month. And also, if you want to be aggressive off this, it's really held a range here from 184 to like 186. That's been the range for quite some time here, even in the after hours. So see what way you decide to go out of that range. I just want to alert our traders and investors too. The S&Ps are finding resistance here just at the mid-range of the session. So keep an eye on 27.29. That will be important. That is the number that could save us and maybe get back up to see the close. The recent high in that little bump, 26.29 and a quarter.
Spencer, lead the way here. We got 7 minutes before our first guest, and we have a lot of earnings reports.
Who was an accounting major, and he put that in the chat. He was an accounting major in undergrad, so he's going to clear all this stuff up.
We need those accounting majors.
Okay, go ahead, Spencer.
Can we go to let's go to Texan. TXN, Texas Instruments.
Texas Instruments.
Yeah.
Texan. I've never called it Texan before.
Yeah.
That's kind of a good name for it, Spencer. You just came up with the new nickname for Texas Instruments.
All right,
we'll call it Texan going forward.
TXN, Q1 EPS $1.35. I feel weird saying all these numbers now because I don't know.
I know. I'm flabbergasted by all of it.
$1.35 versus $1.11. Estimate sales 3.79 versus $3.65 billion. So the sales beat and the adjusted EPS beat. The GAAP EPS.
Adjusted EPS.
I'm sorry. The GAAP EPS was what I read, $1.35. The adjusted was $1.21. Regardless, they both beat the estimate, and the EPS guidance was in line.
It's a good report. It got beat up a little bit yesterday. It's been kind of, definitely not running up into the reports. If we followed the old theme that, if this stock is kind of in the doghouse going in, if they report beat, it might do okay. It is a stock. It did report earnings, though, and it seemed like everything that was reporting was going down. That being said, this reported last night after the bell. So you've had a lot of after hours to adjust to this and a lot of pre-market hours to adjust to this. This has already kind of had its price discovery, and it looks like it wants to be up $4. A lot of different things can happen at 9:30 when the stock's open and the real liquidity comes in. But there's been a lot of volume already traded here on Texas Instruments from last night and this morning, and 102.70 seems like where it wants to be, at least right now.
Simple TI on that.
TXN.
It used to be.
He's just got to be funny because it used to be TI. Joel is so old school that he always likes the old symbols. I don't like when they change symbols either, to be honest with you.
Big
it messes me up too, and it messes up. If I had any algorithms running, it really messes those up.
I'm glad Monsanto got taken over because I'm sick of putting in that old symbol.
Is Monsanto still there?
Well, it's still there, but it's gonna. I guess the deal.
I think it's going through. It looks like it's going through.
We had a number to look at here on the daily, confirming something with the pre-market. Your pre-market high is right at 103.95. You can go back and look at your 4-day high is 103.84. So boom, we're hanging up there, only a buck away from that. You clear 104, you got a gap to fill, and then you got a little room on the upside, though, a double top just under 106. So 104, that's a big number. Coming back on the downside, there's a buyer in here at the 102.50 area that's held up for the past hour or so. So there's your early levels, 102.50 to 104.
And keep an eye on the open. Where the stock opens, You don't want it to trade through that price. That's always the bogey. There's a strategy for you there. Again, I would say has proven true for 19 years. And obviously nothing works every single time. So it's just a matter of, as traders, we always live just in the percentages, not in the absolute. So if something works 55% of the time, it's a viable strategy and it's an edge. So watch those opening prices because when they come down through it, a lot of times that is a sign that there could be more trouble ahead. There's so many. Amgen, there's, we did win already. There's iRobot from last night. Teradyne, TER got absolutely annihilated. And it came back from those lows. This got just silly. Go to the TER report. I want to know what the numbers were because I never looked at it. But the trading action was insane.
The Q1 EPS 45 cents versus a 42-cent estimate. Sales 487 versus $478 million. So beats on the Q1 numbers. Q2 EPS guidance, though, coming in very weak. 93 cents was the Q2 EPS estimate. The actual guidance that they gave was 45 to 52 cents. So they missed that by about half or 50%. Sales also light. So
a huge miss on the guidance.
Huge miss on the guidance.
And this absolutely got annihilated on the initial numbers. I was watching the trading action. It was just no bids. So somebody hit this, believe it or not, all the way down into the 30 handle. They hit this down to like 30. I have a low of $30.41. So that's for real. It traded down to $30. It traded down $11 last night. And somebody's really regretting that this morning because it's at 38. So it's not nearly down that far. 30 was just silly. I actually, when I saw that, then I started trying to throw bids. And I think everybody else did too. And it was immediately back at like 34. And then I'm like, wow, do I buy 34, 35 when I could, when it's just at 30? It's hard to pay that then. And obviously it's continued up since then. But wow, that's called trying to sell into nothingness. And if you have a position and you see no bids, don't just throw it out there and hope for the best. I mean, there's no bids. This is what happens. The thing was like at $34 and boom, it's at 30 because somebody just got excited. It wasn't a ton of volume. And they're like, I got to get out. Maybe it's margin, maybe it's for whatever reason, but they had to get out and they're hitting into nothing. So then bids start to come in. As soon as you see something go down that far, traders, it hits filters, it hits, their scanners, their systems, and they're like, wow, what's going on here? I'll buy that thing at 30. I'll buy that thing at 31. I'll buy it at 32.
30, Dennis, did you go 30 bid?
Oh, right away. Right away. I hit myself. I'm like, whoa, what's going on? I'll buy Teradyne down $10. And, you don't have a chance. But the moral of the story is if you are in these trades and there's no bids, just relax for a minute. Then hopefully some bids will come in. Don't just hit something $5 lower because there's no bid.
There's 100,000 shares traded on that bracket, so it wasn't.
Some of it was like 34, though. A lot of that bracket was like 34. There was a big buyer there. I saw that it traded actively 34 to 35. The 30, not a lot, traded down to $30.41. It was pretty.
Hey, Dennis, are you looking at the tape? I mean, I know you're watching the price action. Are you watching? I know we've kind of cut our teeth on reading the tape. Are you keeping an eye on the tape as well? See if like some big blocks go off and.
Oh yeah, I've always been. We know I'm an order flow trader. I've got my consolidated tape up continuously, and the consolidated tape is the tape that breaks down all of the trades happening on every single exchange, off exchange or on exchange. So I'm following that always. Like that is like when I bring up a stock in my montage or in my, trading window there, it automatically goes up into, it goes automatically into the consolidated tape, so I can see immediately what's happened there. So like as an order flow trader, you want to be watching the tape. I think it's the most valuable information. I think it's more valuable than the chart.
Okay. All right. Spencer.
Yep, it is.
What a great guest we have coming up here.
8:35. We're going to take a quick break and grab our guest of the day. His name is Chuck Self. He's the CIO of iSectors. We'll be right back in a moment with Chuck. Be right back. And welcome back, everyone, to PreMarket Prep. Spencer Israel, Joel Elconin, and Dennis Stick on now with Chuck Self. He is the CIO of iSectors. Chuck, how's your morning going?
Hey, it's going well. It's beautiful here in Appleton, Wisconsin. The snow is finally melting from the 21 inches we got last week.
Yeah, you guys are further north than we are, I think. So we've been complaining, but you're still getting it worse because we're in the 60s or 50s right now. Anyway, let's get your thoughts on this market. We started the show off talking about earnings. Well, we've been talking about earnings all day pretty much, but the theme of the season has been earnings beat, doesn't matter, nothing matters, everything's bad. Thoughts on that?
Well, this is the late cycle of the market. And in late cycles of the market is always discounting. And getting back to your GAAP versus non-GAAP conversation, people know that the GAAP tells you what's going to happen, and the non-GAAP may give you more indications about what's going to happen. And that's why people are looking at the non-GAAP numbers also. Our models at the beginning of the year decided that the sectors that are going to be going forward are the late cycle sectors: utilities, energy, real estate, and financials, which is usually a mid cycle, has bled into a late cycle sector. And that's what's happened. If you look at the last 3 months, utilities is the only sector that's up over the last 3 months. And if you look at the last month, the number 1, 2, and 3 sectors are energy, utilities, and financials. So even though the technology did well in January and even into the February correction, it's turned around. It's becoming a dog, and we're focused on these late cycle sectors.
So are you watching the utilities more closely now, or are there specific sectors on your radar now that we're about a quarter of the S&P stocks have reported now? So, but are there specific sectors you're watching more than others, or just everything?
Yeah. Well, and we run a rules-based quantitative process that takes in both macro and individual sector information, and utilities continues to be a sector that we want to ride. It's interesting because people think of utilities as an interest rate sensitive sector, but the reality is when you get to this part of the cycle, the sureness of earnings going forward, when there's not a lot of clearness on what's going to happen, and and also the rising dividends, and you're already getting 3.5% while you're waiting, is actually why utilities are doing well. If you had told me that the 10-year was going to go up from 2.70 to 3%, you would have said, oh, utilities are going to get killed. Well, actually, again, it's been one of the best performing sectors. So it's something that is part of the late cycle that utilities would do well. We are also very positive on energy, and we think that the energy bull market is going to continue to do well. We use the VDE, Victor David Edward, as the sector play there, the Vanguard. And it looks like it's going to go back towards this 107 high in January, and we're in the 101 area, and if it breaks that high, then that's going to be great for the stock, bad for us at the pumps, but great for the stock. And we think that traders should be in VDE. And then our value play, the kind of contrarian play, is TLT, the iSectors 20-year plus Treasury bond. And as we indicated, the prices have gone down, the yields have gone up. We're at about 3.20% on the long bond, but we think we're going to hold the 117 level that we saw earlier, and while you're waiting, you get almost 3.25%, and so we're continuing to hold the TLT. We've been early on it. I'll admit we've held it here through the bond market decline, but ultimately we think that the economy is not going to grow as fast as people expect, and TLT will do well. And that's what the non-GAAP earnings, going back to that conversation, that's what the non-GAAP earnings are telling you. They're telling you that it is that things are likely to slow down, and that most of Boeing aside, most of what we've seen have been more one-time or short-term earnings surprises.
Chuck, Dennis Dick here, and I just want to take you back to the TLT, and I follow you there on Twitter too as well. Enjoy your commentary. Just talking, and I'm a stat arb guy and been trading, statistical arbitrage with Bright Trading for like 19 years. And I've always followed the TLT versus the utilities. You were just talking TLT and utilities. And usually there's a very high correlation between the TLT and the utilities. But in the last week, this correlation is just not working out. The TLT keeps going down here, yet the utilities are not going down. They're holding on. Why do you think it's a little bit of a decoupling here, recently here between the utilities? Why do the utilities, they're kind of telling me that they think interest rates are not going higher, but the TLT is telling me that interest rates are going higher. Why does the utilities not care? Is it just that they're defensive and the market wants defense right now?
Yeah, and I'm going to be self-promoting here in that I spent the first 20 years of my career in the bond market trading bonds and traded. I managed mutual funds and so on. And the bond guys always believe we're smarter than the stock guys. Now, whether that's true or not, we could debate that at another time. But I'm one that listens to the bond market first. So probably the currency guys are smarter than all of us, but that's another story. But in any case, the bond market is telling you that things are going to slow down. And again, I think the forward looking earnings reports are also telling you that that may be the case. Also, again, I think you're correct. Utilities have just become the place to hide money in the market. There's a lot of visibility in utility earnings, and as long as the economy is going up, people are going to use electricity and gas and water and so on, and so the people are hiding there. It was cheap to start with, of course, compared to a lot of other sectors in the market, and so people say, hey, here's a cheap sector with earnings visibility. The investors are saying I could get paid while I wait, and how can I lose? And so, and and there's a never-ending demand for yield. All of us baby boomers are looking for yield as far as the investors are concerned, and so I think utilities, real estate will be kind of fallback positions here.
You got a real estate ETF, Chuck?
Yes, yeah. We're in VNQ, the Vanguard
VNQ
REIT ETF, and it has the real estate is just a couple of percent in the S&P 500, and we're over 10%. So we have a heavily overweighted position there. Again, that's a value play. In as we all know, the commercial real estate market has been hit by the Amazon vacation of the world, but it's already in the market, and as long as the economy is doing well, and there's cranes, still building because there's demand for real estate, and of course REITs are mainly commercial real estate, and so the demand has picked up significantly in the past year, and that's the earnings, and most importantly, the dividends that they're paying are increasing over time.
We're on the line with Chuck Self. He's the CIO of iSectors. A couple questions here coming out of the chat. NGG, do you own that or have any opinion on NGG, National Grind PLC? Not one I've heard of.
I don't know it. Again, we only own ETFs, so okay. I have to admit I don't know it.
Okay, all right. No, you're kind of with this utility call, you're kind of flying in the face here of of the street as far as interest rates going up. TLT, I've always looked at utilities and as kind of as a safeguard, and you got the divergence there, so. It'll be interesting to see how that works out. Everyone.
Well, and the other thing that I think your listeners have to remember is that almost everyone is under diversified in this market. We've all become so used to being up, having stocks going up, and whenever stocks go up, bonds go up. Well, in the first quarter, we saw both stocks go down and bonds go down, and so people have to start to increase their kind of the number of names and the type of names that they're willing to own. If I could put a plug in for our website, iSectors.com. On our blog, we have a new ebook that we've written called 5 Valuable Liquid Alternative Solutions for a Down Market. We actually think that this is just going to be a correction, and that will resume the bull market when when the Fed stops increasing as fast as people expect them to. But there is a 30 to 40% chance that this is the start of a bear market. If you look at 87, at 2000, and 2007, it was tech that led the markets down, and tech is acting badly here. And so, there's a chance that there is a bear market. So everyone's got to get more diversified in the investment part of their portfolios, and we hope our ebook can help people do that.
Chuck, you are the reason that our show can never have our own ETF, because you stole our ticker, PMPT, which is super thrilled about that.
For the right price, we'll sell it to you.
Yeah, right. Okay, I'll talk to my boss. All right, we've been on the line with Chuck Self. He is the CIO of iSectors. Chuck, thanks so much for the time today. Have a good rest of your morning, and get out from under that snow.
Okay, thank you, guys.
All right. Thanks, Chuck. 8:49 now. Do you want to run through if there are any notable ones, any imbalances, Dennis? Do we have any?
What, they're a little to the sell side, and that's why the S&Ps have started leaking. And I'll say it again. I say this every couple months on the show is, there is futures traders out there that believe that futures always lead the stocks. Futures often lead the stocks, but in some cases they don't. It flips back and forth. I have traded stocks against, I used to always trade stocks against futures, but I don't need to trade the futures anymore because I have the SPY that is a tighter spread than the S&P futures. So I can trade SPY versus the stocks. But I will tell you, when you get stock information like imbalance data, that all comes out negative. And we were sitting there flat on the S&Ps. It's not a coincidence we started selling off at 8:30. So we've got mostly to the south side here this morning. They're not big, but they're to the south side. It's not really one of those really standout days where, whoa, imbalances are taking us down. But it wasn't helpful this morning when you see Verizon 90,000 to sell. Verizon with the double upgrade here today. It's actually come off a little bit here because people are like spooked because they see this opening sell imbalance. And I think maybe this isn't going to open up. And people are buying at 50-20 on the double upgrade there this morning. You can see Pfizer 164,000 to sell. Hasn't really traded much, but is offered down here now. It wasn't offered down before. Bank of America, 105,000 to sell. Banks could be okay here today, though. And if there's a sector, keep an eye on the TLT. Chuck was just talking about the TLT. You want to watch the TLT when you're trading not only the utilities, the banks, because there is an inverse correlation between the TLT and the banks. Doesn't hold every single day. If stocks are getting annihilated, stocks are going to get annihilated. I don't care what the TLT is doing. But other things being equal, when the TLT is weak, usually you will see the banks a little bit stronger because the banks want higher interest rates. MO 68,000 to sell. It's just been a complete disaster zone in the tobacco stocks. Obviously, they just cannot stop going down. It's like nobody's going to smoke anymore. Maybe they're all just going to smoke pot. Walmart, 19,000 to sell small. Going the other way, we have Square SQ, which got annihilated yesterday. Maybe we should stop there. It has a 203,000 share buy imbalance. So Square is trading up this morning on the backs of that buy imbalance. What did you think of the trading action in SQ yesterday, Mr. Elconin?
It came off hard, very, very hard here. Big level for you Square traders. We are trading up 47 cents at 46.48. You had a low yesterday at 45.31. And to just go back and look at your dailies, 44.94. Then you had a double bottom right at 45 even. So that is the level of levels there. Holding 45, $1.50 away from it. Dennis, I will concur with you on the stocks actually having an effect on the futures. Those, excuse me, those imbalances.
Oh, Joel's getting choked up talking bad about the futures. Are you okay, Joel?
No,
Joel's got to get a drink of water. He really got choked up on this one.
Yeah, Dennis.
Get the hairball out. Get the hairball out.
All right. Hey, listen, I just took a little water in the pool this morning. Dennis, did you
what time did you get up for the pool?
I got up late today. I got up at 5:15.
What? Sometimes you probably wanted to skip the pool though and go trade those futures when you see them wild, don't you?
Yeah, well, the pool opens at 5.
Can you trade futures from inside the pool? Is your iPad waterproof?
I do not bring my phone in the pool. A lot of people do, but
really?
Yeah. Well,
are they making trades?
I don't know what they're doing, but I see a lot of people with their phone, and I know exactly what would happen to my phone if I brought it in the pool with me. It would end up in the pool. Dennis, did you get anything out there in Boeing? Because it hit 340 on the nose.
Pound at the table on this thing. It did hit 340?
Right on the nose. Right.
And we talked a lot. 334. This is leaking now. I think it gives it all back. My opinion. I'm 5 points up in the call right now. Well, actually, I started calling it negative. It was around 337.5, and I said up to 340, got all kinds of resistance. So I guess, from when I initially started talking about it, it's only down 3 points, but I think it gives it back. I don't. This is the kind of market that just doesn't want to go up on good net reports. Why not? Maybe it doesn't, but if I was a betting man and I don't have a position on it Boeing, I think it can give it all back.
We got a question here.
But it's the market environment we're in.
Bull for Trading is asking about SKT. Dennis, do you know what stock that is, SKT?
I've traded it before. The Tanger Factory Outlet. It's a REIT. And this is going to follow, what Chuck was just talking about, too, is the other REITs there. I mean, support is support until it's broken. Nice 6.53% dividend on the thing, which I kind of like, too. But right now, the stocks are just not in favor, it seems like. At least, these REITs are not in favor. I mean, you look at this one here. The trend is definitely not your friend. This, if we go out to a weekly chart, at the end of 2016 was $40. So it's been cut in half down to 21. I'm not sure exactly, what real estate. It sounds like they got factory outlet real estate. I don't know if it's maybe nobody's shopping at factory outlets anymore or what it is.
Not at all.
Is that what it is?
At Amazon, yeah, those things are. I'll tell you right now, 3 monthly lows at 21.14 to 16. So that's your major support if you're trying to buy it here. I guess you do have some downside protection with that dividend yield, but this is one of those charts where you got to get away from that level, or you're going to have some continued downside. It hasn't been under $21 since July of 2010, when it had a 2002 low. And actually, the August 2010 low was right here at 2102. So hopefully it stays above 21.
This is like right in the heart. You talk about a lot of things getting Amazoned, but think about the factory outlets. I mean, everybody's buying things online. So now you got these huge, complexes there that are selling stuff at discounts. When you just buy the stuff at discounts online as well. So, I mean, this is, an Amazon effect showing up here by this thing dropping $20 in the last year and a half as well. So it's not only your traditional retailers, it's also your real estate that's holding a lot of the, the space that some of these might occupy. So, and you've talked about this, we looked, maybe this was the one you should have been looking at. You were talking TCO, Joel, back in the day, and it's off significantly too. I mean, some of these, just holding the real estate on these, huge box stores or in trouble.
It's tough.
It's the Amazon effect. Amazon effect as well.
Qualcomm after the bell. BZ.
I don't want to know. It's probably going to get killed just because.
Okay.
This was, I got lucky. I sold half. So I was up there and I put this in my invest portfolio. We know I've told the story multiple times. I like you guys to be my sounding board when I cry about my losing positions. But, I thought, there was the outside chance. I thought there was value at 62. And I thought there was the outside chance the deal could get done at 83, 84. Well, it was a value trap because the deal didn't get done. It got trumped, obviously, and then it's been straight down ever since. The talks of going private have not helped this thing at all either. It's now almost got a 5% dividend. Is there value? Sean Udall was on our show. He thinks there's value. I think there's still value here too, but it's been a value trap so far, and it's been ugly. Stock is completely out of favor. So I'm expecting nothing good from Qualcomm, although maybe you just get a dead cat bounce because it's been so ugly going into the report. Talking against my book, but it's been an ugly one.
All right,
okay.
Let's do a couple ratings. Let's do a couple ratings real fast. We haven't gotten to ratings yet today. There aren't many that are not earnings related. Most of them are. The couple that crossed my radar that are not directly related to earnings. Disney catching an upgrade this morning from BMO. I guess they're bullish on the Star Wars Solo movie out in 3 weeks, but they're upgrading the stock.
I'm pumped for that movie, by the way.
They're upgrading it to market performance, so neutral upgrade. Disney at BMO, and then the other one was a Fiat Chrysler FCAU downgrade this morning at Jefferies to neutral, from buy to neutral.
Just not responding at all to this. It's one, BMO is not very influential. Nothing against BMO. My wife worked there for a lot of years. Great bank, but they don't have the influence that some of the U.S. brokers have, obviously. And then if we just jump over to FCAU, Jefferies is very influential. It is trading down 2% on this report. Chrysler's been a monster stock.
Yeah,
you think about Ford and think about GM, how they've gone nowhere for the last 2-3 years. FCAU has just gone straight up. It's been $6. This was in 2016. This was the one you wanted to own. Now it's $23. So you're coming in here now. I mean, maybe I'm on the side of Jefferies here because I feel like you're way, way, way late to the party if you're coming in here at FCAU now, because the easy money has been made. Obviously, they did the reorg, when they merged with, Fiat, and, maybe that's what's, helped it. Maybe it's the European exposure to it now. I'm not sure why it has outperformed GM and Ford, but has massively outperformed. But, you look at this move, even in the last couple months, I mean, it's moved up significantly here. I don't know. I guess it's the best of breed right now.
A little bit interesting. Aren't they the ones that said they weren't even trying to do electric vehicles? Or
they're the best ones that they're going
right?
non-electric vehicles.
I think,
I don't know
because
that's true.
I'm thinking about the auto show back in January, and I think I remember the CEO saying,
we don't like electric vehicles.
We're not even going to try to do that. I think that's what he said. Hold on. Let me go back to the pro. If I can find his comments. Because, I'm pretty sure they said something about we're not even going to attempt. Because, GM and Ford, they're all coming out with we're going to have X number of EVs.
Oh, GM was saying 21 cars or something going to be fully electric or something. No plans to.
Yeah, and
huge dump.
I think the Fiat Chrysler CEO was like, "Nah, we don't really care." I don't know. I can't find the exact.
What do you think, GM and Ford? I still own Ford, and it's been a dog in my investment portfolio. Another value trap. All these value stocks have been value traps. What do you think, GM here? I mean, everybody's excited back in the summer or back in a year. Not even in January. It got up to $44 or $45. Now it's 37. It's got a 4% dividend. You guys looking at you're a value investor here, Spencer. Are you looking at General Motors at all? Go along with your General Electric. You could just get all the General companies.
General Dynamics.
No, you could start the General Fund.
I mean,
General Dynamics.
I learned a hard lesson because I don't really have stocks in my portfolio. It's mostly ETFs in my portfolio. I don't really have stocks, and I learned a hard lesson with that GE, which you said for a long time. I just didn't listen. Just wait for a reason to buy it. So I've been looking at Kraft Heinz, but I'm not going to buy that until it starts going up.
Well, you should have told me about that, because I did buy Kraft Heinz, and I didn't even listen to my own advice. Just it went up for one day, and I got excited and bought it.
Just wait for a reason. So sure, I'll buy it when it starts going
horrible
up.
purchase, straight down.
I'll buy it. I know that was mine. I got a little. I'm in that one with you, Dennis.
I thought it was like I had a nice day, and I don't know if I got an upgrade the next day or something. I was all excited. And it's just collapsed ever since. Every food stock, though. It's not just Kraft Heinz. Look at Kellogg. Kellogg broke down again. You look at, well, I guess not every single one. Mondelez, MDLZ. That's through the 40 now. It's breaking down here. It's like people aren't going to eat anymore. There's no need for canned foods anymore.
You know what? Lisa's trying to get me on a vegan diet, so maybe.
Oh, Joel, don't do it. Fight her on that one. Oh no, it's tough. We have friends that are vegan, and like we were making supper for them like one night, and we're like trying to figure out what can they eat, and they're really nice people, and we're trying to figure out what can we cook for them, because it's tough. They can't eat anything that comes from an animal, so there's no nothing at all, and. What else is it? Anything that comes from an animal, right?
Yeah, that's it.
I don't know. I think it's like you can't eat anything, but
pretty much you can't eat anything. You can only eat salad.
I did find the Fiat Chrysler comments from January. The CEO said they're going to, as far as electrification, they're going to do what they're required to do by the regulatory agencies, and that's pretty much it. So they're going to do the bare minimum when it comes to electrification. But anyway, that is 9:01 now. So I think I'm going to wrap up for the day. That's going to be our show, folks. On tomorrow's show, we are joined by a new guest, Martha Stokes, co-founder and CEO of TechniTrader. She'll join the show tomorrow at 8:35. Thanks to all of our guests in our chat today, or our listeners in our chat at premarket.benzinga.com and on YouTube. Thanks to our guest, Chuck Self. Hope you all have had a good morning, and hope you have a good rest of your day. And we will see you folks on Thursday. Peace.